Hello and welcome. In this video, we'll be discussing the recent changes to the ethical standard for auditors in Ireland. Let's start with why these revisions were made. They reflect recent changes to two key international standards, the International Code of Ethics for Professional Accountants and the Ethical Standard in the UK. These changes ensure that the Irish ethical standard stays consistent with international practices, helping to maintain clarity and protecting the public interest. Now, let's look at some of the main changes to the ethical standard. The revised standard extends some non-audit services requirements to network firms. These include restrictions on lone staff assignments within audit firm networks, and a prohibition on contingent fees for certain non-audit services provided by network firms. The language used in the standard has been updated to align with the quality management standards. There are enhanced restrictions to limit how much an audit firm can earn from entities that are connected to each other. New requirements have been introduced for public disclosure of fee-related information for audits of public interest entities and publicly traded entities. The standard has also been improved to make it easier to follow. Key enhancements are clearer requirements for auditors and reporting breaches of the standard, with an increased focus on viewing them from the perspective of an informed, objective outsider. Better communication about non-audit services with those responsible for governance at public interest entities and publicly traded entities, as well as more examples to provide practical guidance for auditors, such as examples related to internal audit services and IT-related services. The current ethical standard contains extra requirements for auditing listed entities. One of the key updates is that the term listed entity has been replaced with publicly traded entity. This change aligns the Irish standard with both UK and international ethical standards. So, what exactly is a publicly traded entity? It is an entity that issues financial instruments, such as shares, that can be bought and sold in a public marketplace, like a stock exchange. This change means that audits of some entities whose financial instruments are not actively traded, such as special purpose vehicles, may no longer need to meet these additional ethical requirements. You can find the full details, including the revised ethical standard and a fact sheet with more information on the changes, on our website at IAASA.ie. The revised standard will apply to audits of financial periods starting on or after the 15th of December 2026. Thank you for watching this video and for your interest in the Irish auditing standards.